Well guys, do I have a cool video for you here today. Today I'm going to take you through an account I have, a stock market account, and I'm going to share with you the positions I have that I think have the most potential upside over the next few years versus the positions that I think have the least upside over the next few years. I'm going to show you in detail my entire public account that is available for everybody in my private stock market membership group, and I'm going to take you position by position and basically tell you this one I think has the most upside, this one has the least upside, and kind of give you the reasons why I think this. I think this is a video you guys should get a ton of value out of, kind of hearing my thought process around these sorts of things. So I hope you guys really enjoy this. Once again, this account I'm showing you here today has over $250,000 in it, and it's in my private stock market membership group. If you're interested in joining that group, we actually have a deal going on right now. You can save yourself $700 on an annual membership. That's going to be linked down there in the description. There's a million reasons why you want to join that. You have access to several courses as being part of that group. You have access to our private Discord. You have the access to me. You can ask me questions whenever you want, chat about stocks, different ideas, things like that. Also, I post videos in there every single Friday and every single Monday. So there's a million reasons why you want to be part of that group. It's linked down there in the description if you want to join, okay? So first off here, if we look at the public account, let's just look at some of the positions we have. We essentially have 8 stocks in this account, and once again, a little over $250,000 in it. We have Alibaba shares, doing pretty well on those shares, up a little over 20% on the Alibaba shares. Alibaba is a massive company out of China, one of the biggest out of China actually. Cirrus Logic is another position we have, a semiconductor company, a small semiconductor company, doing very well on that one, up about 22%. Elf, that one's doing amazing for us. We just started buying that one a few months ago, and we're already up over $16,000 on that one. That's a makeup company, a very small makeup company. Eli is a golf related company, also a lifestyle apparel type company, up about a little over 10% on that one. Facebook is obviously a massive Facebook Goliath company, you guys all know. Facebook platform, Instagram platform, WhatsApp, Oculus, they own it all. Doing amazing on Facebook. That's by far away our biggest position, as you can see, up over 26% on that one. Skywork Solutions doing pretty good on that one. That's a semiconductor play. You look at the teardowns of any iPhone, any Samsung, any Huawei, you're going to see probably a bunch of different Skywork Solutions chips in there, and that's also a big play for 5G. If we look at Tesla, well, that one's our only negative position. We're down about over 8% on Tesla. I plan to continue to buy those shares pretty heavily over the next few months, especially as long as they're under what our cost basis is. And then Whirlpool is an appliance maker out there. We're doing pretty well on that one, up about 15%. All these positions have been added at some point, either in 2018 or 2019, and needless to say, the account overall we're doing pretty well, up about $53,000 and up about 24.5%. And for an account that's basically only been up and running for a little over a year, like, I'm thrilled with the performance there. But that's not the point of today's video. The point of today's video is talking about which ones have the most upside. And so when I was thinking about doing this video, I was like, what should we do? Should we do like most potential upside over the next year, most potential upside over the next 3 years, most potential upside over the next 5 years? And I basically decided for today's video, we're going to talk about the most potential upside for these stocks over the next 3 years. 1 year, it's just not enough time, to be honest. It's just too short term. 5 years, a lot can happen over the next 5 years with any of these stocks, for positive or for, better, I guess you can say. So 3 years, I think, is the most realistic one. Now, you might ask, why hold 8 stocks and not, let's say 2 stocks or 3 stocks or 20 stocks? This account obviously has over $250,000 in it, so it's a good chunk of money, right? And if we think about this, for me personally, the 20 stocks, for instance, that's too many stocks. There's just not 20 stocks in the stock market I really want to buy at a particular time. So I like to concentrate my money a little bit more, but at the same time, put it in the 2 or 3 stocks you believe in the most. For this amount of money, that's too risky in my personal opinion, because all it takes is one of those stocks to go really bad and your account's completely devastated, right? So 2 to 3 stocks, just not nearly enough. And then like 20 stocks, 25 stocks, that's just way too much for me. So for me, anywhere from like 7 to 12 stocks for this amount of money kind of makes sense, okay, guys? And I mean, if we look at it, there is some concentration in positions. I mean, Facebook's by far the biggest position with nearly 72,000 in that one. And then we have Skywork Solutions, 40-something thousand. We have Cirrus Logic, 40-something thousand. Elf, 40-something thousand. So needless to say, we do have some concentration of positions there, guys. So let's get into this, guys. So coming in at the least upside of the entire portfolio, some of you guys might have guessed this one, Whirlpool. Over the next 3 years, refrigerators. Whirlpool, I would say, has the least upside of anything in the portfolio. I mean, it's an appliance brand. I do still see it as a little undervalued, even where it's at now. But mainly Whirlpool is more of a play because I like the company overall. I believe in the management team. I believe in the brands. I believe, the things they sell are not going away. Refrigerators and ovens and dishwashers and laundry and all those sorts of things, right? It's not going anywhere. A very safe business model overall. Great brands, well recognized all over the world. Very well run company. Pays a good dividend. When I bought into that one, they paid a dividend yield approaching close to 4%. Even if you buy into it now, it's like 3-something%. So needless to say, I would say that one probably has the least upside. By the way, I just want to mention, don't just buy stocks because I'm buying stocks. Do your own research on stocks. I think that should be self-explanatory, but I feel like I need to mention that for whatever reason, okay? So Whirlpool, I would say, has the least upside. Coming in at the next one, I would say Eli stock, Callaway Golf. I think that one has the next least upside, okay? So I guess you could say that one comes in at number 7, their position. Eli, I like that one. It's a golf brand. Golf is on the comeback in a big way. Golf kind of, after coming out of the recession, golf was just in a very bad place. And, a lot of players kind of left the game. Nike stopped making golf clubs, for instance. And I feel like Callaway's in a sweet spot here because golf is coming back. The excitement's starting again with Tiger Woods being back on tour. He just won the Masters. They also own some good brands like Travis Matthew and OGO. They just bought Jack Wolfskin, which should be very interesting how they integrate that in the business. And then they also have a big investment in a brand named Topgolf, which is expanding all over the world. They build these unbelievable driving ranges / party places, cool hangout places. And so Eli, I certainly think that stock has, good upside to it or in the future, but it's just not as much as some of these other stocks, I guess you can say, guys. So that was why that one comes in at number 7. Coming in at number 6 is Alibaba Group, okay? Alibaba, we're doing very well in that position, up 20+%, but I feel like it's still undervalued here. I feel like there's good upside there, but I don't feel like there's as much upside as some of these other stocks, simply for the fact that they are a Chinese company, and because they are a Chinese company, for right or for wrong, I feel like they're always traded at a discount compared to if they were American. If Alibaba was an American company, okay, if that same exact business model was just as successful in China as it is in America, and their business, all their numbers were the same, for instance, revenue, net income, everything was the same, let's say, and they were an American company, I think that stock would trade almost a 2x to where it trades currently because it's in China. I think just for whatever reason, Chinese companies trade at a big discount to a lot of American companies out there. I think that one will always be hampered by the fact that it is a Chinese company. And so needless to say, I think it has still big upside in front of it when you just kind of look at what Alibaba is doing and just kind of owning the world. They're going to be one of the largest companies in the world, pretty much don't matter what, because of how big the market is they're going after and how many different business segments. Amazon's a Goliath beast, but honestly, Alibaba is probably going to be much bigger, and you can make an argument that already is much bigger and more powerful overall than a company like Amazon, even at this point in time. So Alibaba, in my opinion, will be a $1 trillion+ company someday, but it will always trade at a discount compared to if it was an American company, okay? Coming in the next one is number 5, and this one might surprise you guys, Facebook stock. This one might surprise you guys because obviously it's by far and away our biggest position, and to come in at number 5 most upside of the portfolio, you might say, why are you in a position like that if you don't think it has the most upside? Why do you not have the most money in that position? Well, here's the thing with the stock market, right? It's not just about what's the potential reward, keyword potential. It's also about what is the potential risk involved in a stock, okay? And so if I'm thinking about a stock that I want as my biggest position, I absolutely want a stock with good upside, which Facebook, in my opinion, still represents very good upside over the next 3 years, 5 years, 7 years. However, on the flip side, you got to also think about the potential risk, okay? Some of these other stocks we're about to go through have more potential upside, but also their business models could go very bad, and they could also have a lot more downside, okay? So you kind of got to always think about that. And if I'm thinking about my biggest position, I'm really thinking about a position that it's almost impossible for me to not make money in that position over the next 3, 5, 7 years. That's the way I like to think about it. So if I'm buying into a stock, and this is going to be my biggest position, I'm going to have the most amount of money in the stock. I really want a business model that it's almost impossible for me to not make money in that stock over the next 3 to 5 years. Nothing's guaranteed in the stock market. Nothing is ever guaranteed in the stock market. You'll never, for sure always make money, right? There's definitely risk in the stock market. That's why there's the reward on the other side, right? But if I'm looking at just Facebook stock, it's one of those few stocks that I'm just like, I literally cannot see myself not making money over the next 3, 5, 7 years. Literally cannot see it. It's possible. Everything is possible, but I just can't see it. So, Facebook, I think still has good upside. I just, it's my biggest position because I think it has the least downside risk of pretty much any stock, almost in the entire stock market, guys. And that's why that one comes in at number 5. Coming in at number 4 is a small semiconductor company, an audio chip supplier. Actually, it's one of the biggest audio chip suppliers in the world, but it's still small in relative to other semiconductor companies. And that would be good old cruisy doozy, Cirrus Logic. This one, in my opinion, has the 4th most upside of any of the stocks we hold in the portfolio. Obviously, it's a position that's doing very good for us, up over 22% right now. Cirrus Logic represents very good upside potential in my personal opinion because they basically are right now, if you look at their business, let's just talk about 2018. You look at their business in 2018, it was very dominated just by Apple. That's not going to be like that for 2019 and moving forward. They should have Samsung as a big customer again. It looks like they've won sockets in the new Samsung devices. They should be in possibly the next model of the Note. And that is phenomenal news for Cirrus Logic. They're expanding into Android big time now. They have a very successful new amplifier chip in the Android socket. So if you think about the smartphone market overall, you have Apple, which definitely sells, a couple 100 million iPhones a year roughly, and they buy the highest of the highest end chips, which Cirrus Logic sells in the audio space. But also Cirrus Logic has massive potential to expand into the Android space with a lot of other chips, and they just haven't done that yet. Also, if you look at things like AirPods potential in the future and Apple Watch and all those different types of devices, Cirrus Logic absolutely stands a great chance to expand their business considerably in the future. And so I look at that one. It is certainly a risk because they get a significant, like we're talking about, 80% of their revenue came from Apple in this past year, or a little more than 80%. That should shrink over time to maybe 70% or 60%. But needless to say, they're still very reliant on Apple, and it's just kind of the way it is for Cirrus Logic at this point in time. But I look at that one and I look at how much they can expand in Android in the future and with Apple with new chips like voice biometrics in the future. And I'm saying I think there's big potential upside still for Cirrus Logic at this point in time, guys. So that's why that one represents the 4th most upside. Coming in at number 3, the 3rd most upside of any of these stocks I hold is ELF. ELF is once again a beauty company, makeup company, very small cap company. I mean, I think it has roughly a $500 or $600 million market cap. It's less than $1 billion company, very small company overall. And this one, we're obviously doing amazing on it. It's by far away our best position, up nearly 60% on this one, up over $16,000 in literally just a few months' time. And this one I think has huge potential upside because here's the thing with ELF. This used to be a $20, $30 stock, and I think I think over the next few years it's going to head back to that $20 to $30 range. They kind of just, I think the stock got a little overvalued after the IPO. It came out, there was a lot of hype around it. There was a lot of, kind of like euphoria around the stock. And then, so it needed to kind of come down from those levels. Also, I think they kind of mismanaged the business for the short term. They started a retail side of their business. It didn't really work out. It was losing them money. It got management on focus. They weren't focused enough around creators and things like that, and how big the creator space is on YouTube and Instagram. That's really where you got to be. You got to be, always kind of like networking with the influencers who can literally drive, millions of dollars of potential sales toward your products or away from your products, depending on if they're for your products or not. So if I look at ELF, I'm looking at them and I'm seeing a company that's building a much stronger brand with the creator community, and that's good. And so it's a business that I think their profitability is going to explode over the next few years. I think they have a lot of room to expand internationally. It's a very North American dominated company right now, and I think they're just on the right frame of mind right now as far as like focusing this company around getting in the creator space with Instagram influencers, YouTube influencers, because that's so big for the makeup industry. And so I look at that, and then I look at the CEO. I believe in him a lot personally at the company, and a lot of his potential compensation over the next few years is tied to how that stock price does. And he's going to make a lot of money if that stock price goes up considerably. And guess what? I'm sure he wants to make a lot of money for himself, okay? So needless to say, I think he's very, very focused on running this business as good as it can possibly be run over the next few years. So I love that one. I love the brand they have there and what it represents of, like good quality makeup, but for very cheap prices. And also they should be expanding into more retailers in the future and getting more space in other retailers in the future. Huge potential upside for e.l.f. over the next few years. That's why it's my number 3 that I feel is the third most upside, okay? Coming in at the second most upside, there's only 2 stocks left here, Skywork Solutions and Tesla. What's gonna be number 2? It is Skywork Solutions. I feel like Skywork Solutions has the second most potential upside of any stock in the portfolio. We're doing pretty well on it so far, up about 18%. And I think this one's significantly undervalued even here, even though we're up already 18+% on the position. I feel like it has, huge potential upside. One, the balance sheet's amazing. The management team's amazing at Skyworks. But if you look at the 5G wave, they should be able to expand content in a significant way in basically any wearable devices and smartphones over, when 5G starts to come out over the next year or two. And so if I'm looking at this company, I think there's going to be a new super cycle in the smartphone cycle, which is going to expand their revenues and profits in a massive way, because a lot of their profits and revenues come from smartphones. But then on top of that, they for years into the future, they should be able to get much higher average selling prices for basically their 5G related chips versus what they were doing in 4G or 4G LTE. So if I look at Skywork Solutions, I'm looking at a stock that I feel like is very undervalued even here, and I'm looking at one of the biggest pure plays on the 5G wave that is coming, and I absolutely love that about this stock. And once again, amazing balance sheet, no debt, $1 billion+ in cash, phenomenal management team. They've grown this company dramatically over the last 5 to 10 years, and I'm looking at a stock that I think has at least double or triple type potential over the next 3 to 5 years. So love that one. I think it's going to make us a lot of money. I think that will be a position that will be at least 6 figures plus in the future, and that's with us ever even having to put in another dime to that position. So I think we're going to do amazing, and that brings me to think about what is the position with the most upside in my portfolio, and I would have to say Tesla. Over the next 3 years, I think Tesla represents the most potential value in the entire portfolio, okay? Obviously, this is our negative position right now, the only one that's doing bad in the entire portfolio, but I think Tesla just has massive, massive upside potential over the next few years. I think the stock is just being down right now. I think everybody's just kind of looking at it and it's just negativity around the stock. I think these Model 3 numbers are going to start to get amazing again, probably starting in possibly even the upcoming quarter. We're going to have Model Y coming in possibly a year and a half from now. That's going to be huge. The Shanghai factory is going to open probably within the next 9 to let's say 12 months. That's a huge game changer for Tesla there. Possible European factory could get under construction sometime soon. Tesla semis coming in possibly about a year or so. You're looking at all these different factors, and then just the fact that more and more humans are wanting to get electric vehicles rather than gas guzzling vehicles, that whole trend, and then autopilot possibly getting to a place where you can literally even drive on city streets within, let's say, 12 to anywhere from 12 to 24 months. You look at the potential upside for their autonomous fleet of Teslas in the future, or the ability, let's say you have a vehicle, a Tesla on autopilot, to just say, I got a Model 3 with autopilot. Let's go and have that car make me some money, and it goes and picks up riders. That should probably start within the next 3 years, and so the hype will start to build around that. And so if I just look at Tesla's business over the next 3 years, I'm going to see a business that, in my opinion, is going to expand at a considerable rate, and really is a business that I think the profitability should absolutely explode over the next few years. And so I'm really loving this business. And then I look at some adjacent industries they can get into, like insurance. I think they're going to be extremely successful with auto insurance. They're going to be able to undercut competition. They're going to know a lot more about drivers. I think if you look at something like, I don't think a lot of people realize that like a Tesla's far safer than driving a regular car, especially if you're driving on autopilot. So if imagine how low of a rate Tesla can charge potential customers if they keep their Model 3 or their Tesla X or their Model S or something like that. If they keep it on autopilot a significant amount of time and they don't drive their car crazy or something like that, super aggressive, imagine how low Tesla can charge those rates, things like that. There's so much potential upside there, and you're looking at a CEO who's been doubted and doubted and doubted and just, you know, has completely changed the world. Like, no one thought electric vehicles were ever going to be a thing, and now they are. Autonomous cars were like, who knows if that will ever happen. Now it's like, oh, really? Like, a Tesla can literally drive you all over the highways. You don't have to do a thing. It can change lanes for you. It can overtake cars. And it's like, whoa, we're like living in this world actually now, and things like that. So I'm looking at a CEO who's been doubted a million times, and he just, you know, continues to outperform. So needless to say, I think Tesla has massive upside over the next few years, and I think we'll do very well in the position. That's why it's the #1 stock I'm personally buying right now. In terms of where I am putting my money, I'm putting more and more of my money each and every week and pretty much each and every month at the moment into Tesla stock. And as long as it's under my cost basis, I'm going to continue to lower that cost basis until hopefully we're into the $230 range or $240 range. That's where I want to get that one to. So I plan to build that into a much bigger position. Arguably one of my bigger risk stocks I hold in the portfolio, but the reward is just so huge on the other side for this company. It's just a game-changing type company that I think, you know, is going to be a company that's worth hundreds of billions of dollars in the future, 5-10 years from now. So, but needless to say, even over the next 3 years, I think the stock is going to do unbelievable for us. So anyways, I hope you guys enjoyed this. As always, let me know what your opinion is on any of these stocks discussed in the video in the comment section. By the way, if you want to join my private stock market membership group, make sure you get in that today. Huge deal going on that, link down there in the description. Thank you for watching and have a great day.